Hello, everybody. Today is June 17, 2024. Your host, Brent Foster, and CEO of Northbound Wealth Management. Let's dive into the weekly market insights. Market enjoys gains reacting to major reports. Stocks notched a solid gain last week, driven by the Fed's decision, May's inflation report, and Apple's AI-related news. The S&P 500 rose 1.58%, while the NASDAQ composite picked up 3.24%. The Dow Jones Industrial Average, which has lagged most of the year, slid 0.54%. The MSCI EAFE Index, which tracks developed overseas stock markets, fell 1.44% for the week through Thursday's close. The S&P 500, NASDAQ, they both lead. Dow lags, obviously, that's the headline. Market leadership took a familiar form. The tech-heavy NASDAQ led. Obviously, stocks trended higher at the start of the week as investors cheered an artificial intelligence update from Apple. By midweek, the market was split, with the NASDAQ and the S&P moving higher while the Dow lagged. Investors were upbeat after learning that consumer prices rose less than expected in May and that the Fed decided to keep rates steady. However, some investors were unsettled after learning the Fed officials had shifted their outlook and now only penciled in a single rate cut between now and year end. A few months ago, the Fed had indicated as many as 3 rate cuts were possible. So on my blog, on my website, www.northboundwealth.com, I've got Y charts and a nice weekly market insights, major index return summary update. And I like to kind of go over that, especially on the year-to-date front. So year-to-date trailing, Dow Jones is up 3.47%. For the one-year trailing, it's up 15.28%. MSCI EAFE Index year-to-date's up 6.58%, outperforming the Dow. And year-to-date, or one-year trailing number is up 12.82%. The NASDAQ Composite year-to-date's up 18.09%. while the trailing 12-month is 31.17%, so outperforming both the previous two indexes. And then we got the S&P 500, which year-to-date trailing is up 14.65%, and the one-year trailing number, it's up 26.27%. So definitely having good years and good prior 12-month numbers. If you look back at the 5-year trailing number for the Dow, it's up 64.50%. The MSCI EAFE, which is the international one, is up 44.62%. And then the NASDAQ is up 134.9% over the 5-year trailing. And the S&P 500 is up 104% over the 5-year trailing number. That's outstanding given we had COVID and all kinds of different challenges in there. And it's also very indicative of outperformance by the tech sector, given how much the NASDAQ has outperformed the S&P as well as international markets and the value-focused big 30 companies of the Dow in the price-weighted index there. So let's take a look at the 10-year Treasury note and fixed income. We've got the 10-year Treasury note at 4.2%. That is down from 4.45% a month ago. 3 months ago, it was 4.29%. And then 1 year ago, it was at 3.83%. So you're looking at a 4.2% print on the 10-year Treasury note. And so that's a backup over the last 3 months of yields. All right. It's been a busy week for news. Last week was chock full of market-moving events. Between Apple's AI update, inflation, and the Fed, it was a toss-up which one influenced sentiment the most. AI's outsized role in driving market momentum continued last week. OpenAI's deal with Apple arrived at the start of last week, and the news followed OpenAI's deal earlier this year with Microsoft. These companies are mentioned for illustrative purposes only, not a recommendation to buy, sell, or hold any security. So Wednesday morning, the CPI, or the Consumer Price Index, was announced. A few hours later, the FOMC updated its monetary policy. Those pieces of news have only arrived together 13 times since 2008. The FOMC kept rates steady at the current 5.25 to 5.50% target range, a widely expected decision. However, The tame CPI report caused some volatility as investors grappled with how the report may influence Fed policy. So, key economic data this week, we got the Empire State Manufacturing Index, that's that New York area. The Fed official Patrick Harker speaks. Tuesday, retail sales, industrial production. Fed officials Thomas Barkin, Lori Logan, Alberto Musaliam, and Austin Goolsby. Hopefully, I didn't butcher their names. They all speak Tuesday. Thursday, we've got housing starts and permits, jobless claims. Fed official Barkin speaks, EIA petroleum status report. Friday, existing home sales. So thank you, Y Charts. Thank you, the Investors Business Daily, for the economic calendar. This week, notable companies reporting earnings. Monday, we got Lennar. So that'll be an indication of where housing is. And just food for thought. And another fun fact is basically most of the major home builders have been building below demand since 2008 and 9, the great financial crisis or the Great Recession. They learned their lesson by getting over their skis and building too much. And so now they kind of build under demand. It keeps price stability going and prices ratcheting higher over time, especially when you have the economy doing well and you have higher interest rates. It causes actually a housing shortage of supply, hence why prices are up. Lazy Boy Incorporated. Thursday is Accenture and the Kroger Company, which will be indicative of how the consumer is doing, spending money on groceries, and there'll be discussions about inflation there, I'm sure. Friday, FactSet Research Systems, and then CarMax. CarMax will be interesting because you've got used car sales, and that's a leading economic indicator as to the consumer. And so we're going to be paying attention a lot to those things. All right, tax tip of the week. Your plans this summer may be eligible for itemized deductions. These activities can be itemized as deductions if you have plans to sell or buy a home this summer or donate some old items. Here are some examples. If you are refinancing your home this summer, you can deduct some of your mortgage interest. However, there are some limits to these deductions. According to the IRS, the deduction is limited to the interest paid on a loan secured by the taxpayer's main or second home. When refinancing, you must use the loan to buy, build, or substantially improve your main or second home. If you buy a new home this summer, you can deduct mortgage interest if you pay $750,000 in qualifying debt for the first and second home, or $375,000 when you're married and filing separately. Summer is a great time to sift through your things and donate your old clothes, furniture, home goods that you no longer need. If you itemize the deductions and provide proof of the donations, these donations may qualify for a tax deduction. In addition to donating items, you can deduct mileage on your vehicle for services performed for qualifying charity. Also, to keep in mind, standard deductions are pretty high, so a lot of people have kind of been wiped out of itemizing, and so it may not apply to you. But this information is not intended to be a substitute for specific individualized tax advice. We suggest that you discuss your specific tax issues with a qualified tax professional, and this tip was adapted from irs.gov. Stay tuned for the next segment. We got a good show for you. Hey everybody, this is a fun one. Financial wedding tips for a memorable I do. So this is the month of June, and this is the wedding month, it seems. We wanted to explore the range of expenses that can be related to this special event and give some tips. So the average U.S. wedding costs $35,000. That's according to the Not Real wedding study of nearly 10,000 couples from across the country in 2023. The average cost of a wedding ceremony and reception was $35,000, an increase of $5,000 over 2022. With inflation driving costs up across the board, paying for a child's or grandchild's wedding has never been more expensive on the average. Remember that $35,000 figure is only the national average. Depending on where you live, you could be paying way more. A New York metro area wedding would set you back an average of $63,000 in 2023, while the average cost of an LA wedding approached $50,000. Who pays? Regardless of your budget, it makes sense to prepare ahead of time for the event. Traditionally, the bride's parents are responsible for most wedding expenses. Traditions evolve, and sharing the financial burden of a wedding is not unusual. In today's culture, both families, including the couple, should be involved in the budget discussion. Proper modern etiquette is good communication, not tradition. With many couples putting off marriage, more are established in their careers and better positioned to contribute financially or even pay for the entire thing. According to Zola, most couples contribute to their wedding expenses. If the bride and groom want to contribute, let them, even if you can afford to cover all the costs. Their contribution gives them greater ownership and pride in their big day. So here's some tips and ideas. Collectively, all interested parties should decide on a budget regardless of who is footing the bill. If the bottom line elicits sticker shock, start trimming costs early. Here are some ideas on how to have a fantastic day. Hire a wedding planner. It may sound counterintuitive, but hiring a wedding planner can save money by ensuring expenses stay within agreed upon budgets. A wedding planner may also be able to use their experience and contacts to get better deals on things. Cut down the guest list. Inviting fewer people is the most obvious way to save money, according to the Knot survey. Now that's spelled KNOT, like tying the knot. The average wedding guest count in 2023 was 115, with the cost per guest coming in at around $304. Choose the date carefully. While June is a traditional wedding month, off-season weddings can save money, as can picking a Friday, Sunday, or even a trendy weekday date. Don't assume an at-home wedding is cheaper. While a backyard wedding may sound like a great money saver, it can be an even pricier expense than a traditional wedding venue. The cost of bringing everything yourself, from tents to generators to portable toilets and hiring staff, can add up quickly. Throwing a do-it-yourself wedding is also a significant time commitment for everyone involved. The adage, time is money, applies here. So think carefully about what you will get into before deciding. Get creative. Some are asking friends to give talents instead of gifts. If you know creatives, such as photographers, videographers, or designers, they might be willing to help with that expense. What about a destination wedding? That's a good question. Like a local wedding, the three critical decisions when preparing for a destination wedding are budget, preferred venues, and desired wedding date. Here are some pros and cons of having a destination wedding. Here's some pros. You may have a chance to connect more deeply with your family and friends since you're often together for several days. A spectacular and exotic backdrop can make a more unique and memorable event. Booking an all-inclusive resort with a wedding package can help manage costs. The guest list will also likely be a lot smaller. Here are the cons. Not everyone can afford the trip or is willing to travel. It can be hard to prepare for every little detail from a distance. You may feel responsible for creating events before and after the wedding day. Those are the cons. The best time to prepare is 12 to 18 months before the wedding date. This gives guests enough time to budget and organize, and gives couples the best chance of getting the date they want at the resort of their choice. So once you plan your wedding and schedule it, it's like, well, how do you pay for it? You probably should think about that ahead of time, count the cost ahead before you commit. There are several choices to use when paying for a wedding. Consider using available assets, right? That's the obvious one. Now is the time to consider using any money you have earmarked for a wedding as part of your long-term financial strategy. Credit cards. Unlike handing over cash, using a credit card gives you the right to dispute charges if a product or service doesn't deliver what was promised. However, credit cards are only one financing choice to consider. Footing the bill for a wedding or multiple weddings takes a well thought out and disciplined approach. As financial professionals, we can review all of your assets and help you assess your financial options when planning and budgeting for a wedding. How much to spend on a wedding gift? Okay, so this one's for those who are going to attend a wedding. Here are some answers to the FAQ, or frequently asked questions, from wedding experts at Vogue. How much should I spend on a wedding gift? On average, people pay $50 to $100 for a wedding gift, with the amount increasing based on the closeness of the relationship. Coworkers or distant relatives may spend $50 to $75, friends or relatives $75 to $100, and close friends, family members, or wedding party members $100 to $150 or more. Should I buy a gift if I can't attend the wedding? Yes. If you're invited to the wedding ceremony, it's proper etiquette to send a gift even if you can't attend. For those invited only to the reception, a gift is optional. Is it okay to give a group gift? Yes. Grouped gifts are acceptable, especially for wedding party members who have already spent money on other wedding-related expenses, or for families and couples who want to give a bigger gift together. Should I give a wedding gift that matches the price per head? No. The cost of your gift should depend on your relationship with the couple and your means, not the formality of the wedding or the price per head. Is it okay to give cash as a wedding gift? Yes, cash gifts are perfectly acceptable. To avoid misplacement, send cash or checks ahead of time rather than bringing them to the wedding. Do I have to buy a wedding gift for a destination wedding? Well, your presence at a destination wedding can be considered as a gift, as you've already invested time and money to attend. However, giving an additional gift is still appreciated. How long do I have to get the couple a wedding gift after the wedding? So traditionally, you have up to 1 year to give a wedding gift, but it's best to send it as soon as possible after the wedding. How do I address a check to the couple? Write the check out to the one person using their legal name to avoid issues with the bank not accepting checks with the new surname. Think about that. Is it okay to buy gifts that aren't on the wedding registry? Yes, purchasing off registry gifts is acceptable, but make sure it's something the couple will love and appreciate, obviously. Is it okay to ask if they've received the gift if I haven't received a thank you note several months after the wedding? Well, good question. You can gently contact the couple to ensure they received your gift if you haven't received a thank you note. As financial professionals and advisors, we understand the importance of carefully budgeting for significant events like weddings. Whether you're a parent or grandparent contributing to the special day, a couple preparing for your celebration, or a guest attending a wedding, it's crucial to approach these expenses with a clear understanding of your financial situation and goals. We can help you develop a comprehensive wedding strategy that accounts for your short-term and long-term objectives, helping you celebrate life's milestones while helping you manage your bottom line. I just want to thank The Knot, Bridal Guide, Zola, Experian, and Vogue for their contributions to this podcast and to this blog that I have on my website as well. If you want to check this article out for future reference, you can go there. Stay tuned for the next segment. It's best to start preparing for international travel as early as possible. Some destinations may require a special visa or other entry documents that can take time to process or fulfill. Whether you're jet setting into the wild blue yonder or traveling by land and sea, make sure you keep your passport and important travel documents such as health certificates, tickets, and itineraries close at hand. If you bought a brand new camera or electronic device for your trip, consider carrying receipts or the U.S. Customs and Protection Form 4457. This shows that you had the item before leaving the U.S., which grants you a duty-free re-entry. Traveling with a furry companion, make sure to secure a health certificate from your veterinarian. Many countries and islands, such as Hawaii, require specific documentation to prove your pet is healthy. For those who will be driving abroad, remember that a valid license also serves as a second form of ID. Pack your prescriptions in their original packages with pharmacy-generated labels attached. These labels constitute a legal document, and pharmacists may be able to provide a short-term refill in the event of an emergency. Stay tuned for the next segment. Hello, everyone, and today is June 18th. Yesterday I did most of the recording, and then I decided today I would talk about the technical analysis spotlight that I like to do from time to time. And this won't be very long. This will be a short one. Basically, what I have is a chart pulled up of $ SPX, which is the S&P 500 large cap index. And I have a daily chart with multiple studies, advanced decline line oscillator 14-day, the relative strength 14-day, the full stochastics 14-day, as well as the MACD 12, 26, and 9. And I've got the histogram on there, MACD histogram as well. Also, I have the price of $SPX with the 50-day moving average and the 200-day moving average on there with volume to show me what kind of volumes are going on. So I have all those studies in one sheet. That's what I've developed so that I can quickly take a look at the technicals of the market and kind of make a decision as to where things are at. And right now, all the studies are basically in an overbought condition. Relative strength's overbought. Full stochastics have been up over 80 for a couple of week and a half, 2 weeks. We've got the MACD that's coming up there to the top end of the range, nearly 80, which volumes are starting to trail or turn down on the histogram. I'm looking at the 50-day moving average at 5,220 on the S&P, and right now the S&P is trading at 5,476. It was actually at over 5,500 yesterday, and then just to make note, that's quite a bit above the 50-day moving average. So what an impulse we've had move to the upside. And then the 200-day is at 48.31. So there's really been a separation from the 200-day, and that's really bullish for the equity markets. Really big impulse waves on quite a bit of green bar volume. So lots of green on the volume down below. And so that's the S&P 500. I think that looking at the McKellen Summation Index and the NYSE, it's all trending down. Exponential moving averages for both of those indicators are down. And that means that there's internally inside the market, there's some weakening momentum, I guess. Weakening momentum. So also, I like to look at the $SPX A50R, which is the S&P 500% of stocks above the 50-day moving average. And it's an index of that. I've got the RSI, or relative strength, and it's right around the midline, around 50, probably on a momentum or a bullish percent basis. If you get awfully bearish, you're right around 30, and then think of 50 as being the middle and then 70 being the top. And once you're around 70 at the top, that means you're awfully bullish. We've been kind of right in the midline. It's actually been quite a healthy market, and that's a good sign. And then we've got a 46 spot 40. So 46.40 is the percentage of S&P 500 stocks above their 50-day moving average. So that means only just less than half of stocks are really above their 50-day moving average. More breadth is happening in that, but also it could be a sign that there's some weakening there. So we could get a consolidation, some selling, some profit taking, which would actually be healthy for markets here in the coming weeks. I don't know exactly the time frame of that, but it kind of is at the top end of the S&P 500 range. And then let's take a look at the NASDAQ, which is $COMPQ, which is the kind of the cheat code or short code for the NASDAQ Composite Index. Like to look at that. It's tech heavy, so a lot of technology stocks in it. I'm seeing a similar type of chart patterning on the daily chart, 1 year. I've got the advanced decline, the relative strength, full stochastics, MACD, as well as the histogram, and then also the simple moving averages, as well as the price of the actual index itself. And today it's trading at 17,842 on the top end. You've got the 50-day moving average at 16,512. And then the 200-day moving average, which is around 40 weeks, at 15,142. And obviously we were trading back in late April around 15,250 to 15,500, and just an absolute tear rip with barely a break in that move from the end of April all the way to June, from the 15,500 levels all the way up to 17,842. So new record highs, S&P, new record highs, NASDAQ, and then the Dow lags. The Dow Jones Industrial Average is lagging. But I do believe there'll be a consolidation here soon. We'll see. And it's not like something that you just 86 on or sell out on or anything like that, in my opinion, but it's something that you maybe take some profits and be patient or just wait it out. It's a bull market and things are looking good. Even if we get a correction, corrections are healthy. It gives us an opportunity for rebalancing and things like that. So that's what I'll be tracking. Hopefully you found this little snippet of technical analysis spotlighting helpful. Maybe it helps inform your view and understand what we're looking at Northbound Wealth Management. Thank you for your time. Thank you for listening. Stay tuned for the next show next week, Monday or Tuesday. I'll try to get that released. Until then, have a great weekend and enjoy your time in the hot sun and humid weather that I think most of the country is getting, except the West Coast. All right. Have a good one. Bye-bye. All opinions expressed by me, my co-hosts, or my guests are solely our own opinions and do not reflect the opinions of Northbound Wealth Management. This podcast is for informational and educational purposes only and is not intended as personalized recommendations or fiduciary advice. It is not intended to provide and should not be relied upon for any investment, accounting, legal, and tax advice or as a solicitation to offer or buy any securities. Clients of Northbound Wealth Management may maintain positions in the securities discussed in this podcast.